Hello, Joe here, and today I want to talk about the 3 financial scorecards that you need to be aware of as a small business owner. Now, I know when I talk about business finances, when anybody talks about business finances as a small business owner, your eyes typically glaze over. That's quite a common response. But hey, you're listening today, so that's a bonus and it's going to help you get ahead of the game as well. But it doesn't have to be complicated. That's the thing. But you do need to be taking that sound financial control over your business, whether you're a really small business or you've got a larger business. It lies at the heart of all successful businesses. So despite the fact that your eyes may glaze over, there are some crucial elements, some basics that you do and need to be aware of. And when you're running a small business, or a coaching or therapy practice, you will be used to wearing many hats. As small business owners, we do that, don't we? We've got everything to be thinking about in our business. And one of those hats is that of the Chief Financial Officer, the CFO. But it's one that often gets overlooked. People are happy to put on the marketing hat or, sales hat, all these other different hats, but often the finance one's overlooked. Often due to a lack of confidence. And you know what, like I've already said, understanding the basics is all you need. And it is crucial, though, that's the thing, it is crucial that you start to look at your business numbers and then start to understand what they are telling you. Now, these business numbers, they all stem around accounting, although, accounting data, it is looking backwards. It is looking, well, that's all you can do when you can predict the future, but that information that when we predict in the future, we do use other past data. But whatever we're using it for, even though it's stuff that's happened in the past, it gives us that starting point. So it's something that we should not be ignoring. Now, when I say accounting, what do I mean by accounting? Well, a simple definition of accounting is it's just the process of identifying, measuring, and communicating financial information to permit the user to make informed decisions. Now, if you are the user, the small business owner, then you do need to know some of these basics. So you don't have to actually do the accounting yourself. You can employ a bookkeeper to do the routine elements. You could be using a firm of accountants, tax advisors. There are all these people that can help you with the processing of the data, but you still need to know what it is that you're looking at when you are presented with the data. And that's where just knowing some basics helps. Now, I first started out as an accountant, many moons ago. It's over 30 years ago now, and been in practice myself since 1999. So work that out for yourself. It's been a long time. I mean, I only deal with a few clients now, but one of the things that I noticed, there were a few people that actually paid attention when I gave them their financial information and asked questions. Sometimes, I know that there were questions they'd asked the year before, but they were trying to understand what the accounts were telling them. So we would have great conversations, and I'd love it when, an accountant does love it when people ask questions. But the point of telling you that this is one of the most successful businesses that I've seen over that 30 years has been the person that actually asked the most in questions, that really got to understand what his figures were telling him. And then he started, as the business grew, he started getting quarterly information, and then started getting monthly information once he was into the multi 6 figures worth of profit. That's not income, it's of profit. And when you get to that stage, he was just going great. He was having loads of cash coming into the business, and it was staying in the business. It wasn't all going out. He'd got everything running smoothly, very frugal, so he wasn't wasting money in his business, and profit was at the center of everything he did. And he was able to get to that position because he understood what the numbers were telling him. But here's the thing, you don't have to wait till you get to that position. You can start doing it as soon as you start out in business. So what is it that you actually need to know? Well, there are actually only 3 key reports, 3 scorecards that you need to be concerned with. And depending on the size of your business, you may not need all 3, because there is one of them that you can ignore because it's not relevant. Now, scorecards. I love the Warren Buffett quote where he says, if you can't read the scorecard, how do you know the score? I mean, that's so true. I mean, how do you know what's going great in a business and what it isn't if you don't know what the financial information is telling you? And you might think you understand your business, but as an accountant, I've had in the accountancy practice, I've had so many conversations with clients and said, oh, I didn't realize I've made that much money. Well, if I've made that much money, where's all the money gone? Oh, really? Do you have to pay that much tax? I didn't realize I earned that much money, so I haven't saved for that amount of tax. All these kind of questions stem from not knowing your information and not getting that information on a regular basis. And as an accountant, we can't make you have anything on a more regular basis than the annual requirements for your tax return. And if you're a limited company, then you need to be submitting to Companies House, which is the regulatory body here in the UK, as well as HM Revenue and Customs for tax purposes. Different countries have different places where they need to send this information. But you shouldn't just be waiting until the year end when you've got to do the stuff that's needed for the regulatory bodies. You should be looking at monthly management accounts, and that's the key to knowing if your plans are working. And what I mean by monthly management accounts is just the financial scorecards, which I'm going to get onto in a minute, just having those done each and every month. Now, if you're really small, you might decide you want to do this quarterly rather than annually. Now, and I know at this time of recording here in the UK, we are contemplating going into, or we will be going into very soon, a quarterly system of tax payments. So this is going to be great to fit in with that level of reporting, but actually a monthly information, unless you're a really tiny business, is going to be the way to go. That helps you the most because, like I said earlier, we're looking backwards. So the most relevant data from only the month before is going to be the most useful for you. If you just have annual accounts, it's hard to get the clarity on what actual plans were working or not, because you don't see the immediate effects of them, and you've got 12 months worth of figures all jumbled together. So it certainly does help with getting monthly figures. So let me get on with it, with the 3 scorecards that you need. You need a profit and loss account, a balance sheet, and a cash flow statement. So hopefully your eyes aren't glazing over and you are willing to listen into this. Now, a profit and loss account is something very simple. I know through years of presenting these to clients, often their eyes will glaze over because it just looks like a list of figures. But it's just broken down into a few elements. So the top line is your sales figure. So that's just the amount that you've earned that month. Now, the next part is only relevant if you produce something in your business, because we take off direct expenses. We deduct the direct expenses from the sales to give us gross profit. What are direct expenses? Well, you only have direct expenses if you make something. So nowadays, I just deal with service-based, or tend to just work with service-based businesses, and they don't have any direct expenses. So if you are, a therapist or a coach, maybe you'll have a few, but you won't have many. And there will be things like, say, I'll give myself as an example. As a coach, I also have books, and I have a series of mini books that I sell myself. So I get those printed. They're not on Amazon or anything like that. So I getting those printed. They are a direct cost. So it'll be sales minus the direct cost. The printing costs will give me a gross profit. But when it comes to the coaching and the e-courses side of our business, then there are no direct expenses. So if you don't have anything like that where you're producing something, then you can ignore that first part of the profit and loss account, because for you won't have anything in there, just the sales figure. But whether you're deducting whether you have sales, just a sales figure, or you have a gross profit figure, because you've done that little calculation, from that you then deduct indirect expenses, and that gives you your profit, your pre-tax profit. What do I mean by indirect expenses? Well, that's just anything that isn't direct. So that's all your other expenses. So your telephone bills, your rents, everything else like that, software, subscriptions, accountancy fees, legal fees, professional fees, admin costs, all of those things get listed in indirect expenses. And it's just, when you look at profit and loss account report, it is just a list of expenses in categories. But what can you do with this information when you've got it? Well, you'll start to, as you look at these figures month in, month out, you'll start to recognize if there are any anomalies. If you have a budget, then you can compare to your budget. But there are a couple of reviews that you should be doing. The first one is the income review, and that's to understand your business better. You should be reviewing the analysis, so you're looking at monthly trends. So you're comparing the month's account figures that you've just produced to the previous month, but also to the same time last year. You might also want to look at year to date, but again, we're looking at trends in income. The second part of the income review is to split your income between the various sources. So for me, I have income from products, so books and other things, from coaching, and from the e-courses, and that's the split of my income. So I know how much I've got each month, and then I'm comparing those, the income levels from those sources, to the same, to the split in the previous year and in the previous month, and then that helps me understand more what was going on in my business. Because sometimes, you know what, we've got our heads down too much. We don't understand all this information. But if you have an external accountant, you could have these conversations with them. You don't have to do this yourself if you don't want to, but you need to kind of understand what it is that they are showing you if you opt for that service from your accountant or bookkeeper. The other review you can do is gross profit, if you have the gross profit figure. So if you're a coach, for example, like for myself, I don't do this analysis because that element of our business is not the greatest source of income, so I don't worry about it too much. But if you are making something, then a gross profit review will certainly help. And again, it's the same kind of analysis that you would have done with income. So that's where the bulk of the analysis that you're going to be doing and the review you're going to be doing, that's in that element of profit and loss account. So there's quite a bit of data there that you can start to look at and start to really understand how your business is operating. And you'll also know, because you've got the data quite up to date and it's only the previous month, you'll know any recent decisions that you've made, and you can see the impact of them in those figures. And there may be no financial impact, or there may have been a negative or a positive, and you can start to make better decisions when you have this information. The second scorecard is the balance sheets. Now, for most small businesses, we don't really look at the balance sheet because we don't have many figures to go in there. But I'll just quickly explain what it is, just in case it's relevant to you. Now, a balance sheet, there's two sides to it, and they must equal each other. And actually, if you do get a balance sheet, when you're looking at your statutory accounts, we often present them, well, certainly in the UK we do, with not side by side. They're one side on top of the other. We do it that way rather than side, left and right. And one side anyway is assets minus liabilities. So assets, everything you own. So what's in your bank accounts, any equipment that you've got, the value of that, less liabilities. So that's what you owe out. And the other side of the whole equation then is the net worth of your business, and that's your owner's equity. So if you create a net worth statement as an individual, which I encourage you to do because it's a good key performance indicator for your personal finances, then this is just the business equivalent of it. Now, a lot of small businesses, we just don't have much in the terms of assets. We might have a laptop and a printer, and that'll be it. And unless we've got significant amounts of assets or money due into us where we've invoiced clients and they've not yet paid us, then this statement isn't worth producing. Now, if you do have a business where you invoice people and then they pay you with up to 30 days or whatever credit terms that you've given them, you can, of course, just monitor that figure rather than the whole balance sheet, because that is one worth keeping an eye on, making sure that you are collecting money in as quickly as possible. Then the third statement is a cash flow statement. Now, most small businesses, whilst ever they need to understand how cash is moving in their business, don't have to produce a formal cash flow statement. The most important part of that cash flow statement is the operating cash flows. And by operating cash, I just mean money that's coming in from, that you're generating just through the operation of your business. Particularly important if you offer things like payment plans. So it's, your cash inflow is definitely going to be out of sync with how much you're recording in your profit and loss account, your income, and there's going to be more of a mismatch. So you're going to want to start to look at this information and look at your operating cash flows and look at what's going to be coming in over the next month or so in terms of the payment plans with money that's due in. Now, just for completeness, there are a couple of other types of cash flows to be looking at. Investing cash, so that's when you're buying your assets, or finance cash, that's to do with money borrowed and repaid. Again, for most small businesses, that's not relevant. We don't produce a cash flow statement as part of the statutory requirements, only for really large companies. I haven't produced a cash flow statement. I don't think I've ever produced one outside of my professional exams, because they've just not been needed for businesses lower than around 5 or 6 million in turnover. And I actually don't know what the current figures in the UK are for this requirement, because that's not something I actually get involved in. So you probably don't need to be worrying about that either. So that's the statements. Like I've said, we just don't need to be bothered with the balance sheet as a formal statement, and the cash flow statement as well. We don't need that in terms of a formal statement. We do need to be looking at what's expected in future months for the payment plans, and any money that we've got that's owed to us, what we call debtors in accounting terms. So again, that's just the amount of money that you've invoiced out and given credit terms to, and you're just waiting for that money to come in. So to summarize this, it's the monthly profit and loss account. That's the must that you should be having. That's where you're going to get a lot of the reviews from, particularly in terms of income, as well as keeping an eye on your expenses. Unless you hold assets, then when you're not going to bother with the balance sheet and cash flow, well, you don't need a formal statement. You just need to be understanding the main inflows and outflows of your cash, particularly important when you've got debtors or payment plans. And the more that we understand this, or the more that you as a business owner understand this, the more use it is in your financial decision making, the more control you will have over your money matters. And that's what's important. That's going to help you so much in, like I said, making those financial decisions, but just understanding what is going on day to day and month by month in your business. And once you get a handle on this, money and finances in relation to your business isn't something to be scared of. You'll soon get used to having conversations with your accountant. You'll feel more confident doing that because you'll understand what they're telling you. Now, if you're going to do this work, you're going to employ your accountant or bookkeeper to produce this information and have a conversation with them each month about what's happening, and they can help you with this review, then the first few months you may not understand. Just ask questions. Accountants love it when their clients ask questions, because you know what? As an accountant, I always found the most soul-destroying part of the business was you make all this effort, put all this effort in, you create a set of accounts, and nobody says, oh, gee whiz, thanks, that's the best accounts I've ever seen, because let's face it, most people don't even look at them. So they're, from the terms of job satisfaction, an accountant will love it if you ask questions, and there are no silly questions. But if for some reason you think your accountant isn't kind of looking down at you for asking questions, you definitely need to be changing accountants. And that's to do with them as an individual rather than the profession, because we accountants, we love it when clients do ask questions. So start asking questions, start getting this data, and start to understand your business numbers. So that's it from me. Until next time.